The Dow Jones and S&P 500 hit fresh record highs while the Nasdaq falls on Friday. All three major averages gain over 1% for the week. Treasury yields dip. The US dollar registers the first weekly fall of the year. Stocks in the Asia-Pacific open mixed in early trade. The Nikkei extends its rally to hit a new high. The GIFT Nifty suggests a flat start for the Indian market. Oil prices slide and post a weekly decline as hopes of rate cuts from the Federal Reserve dim. Brent crude trades at around $81 a barrel. After 11 years, Centre reveals the All India Household Consumption Expenditure Survey shows the gap between rural and urban consumption narrowing, while household consumption rises sharply in the last decade. The Finance Ministry will meet with fintech players in Delhi today to reiterate regulatory procedures that need compliance. Sources say that Paytm will not be part of the 25 to 30 companies that will participate in the meeting. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines. It's a fresh new week, so we do have to talk about a lot of cues. But first up, let's look at the Asian markets as we do always. Largely in the green right now, it's the Nikkei, which is powering through with gains of around 0.5%. We do have the likes of Taiwanese index, which is sitting with gains of 0.2%. Hang Seng is up 0.2%. And it is after a decent handover that we got from Wall Street as well. Kospi is the one which is in the red right now. But if we look at the GIFT Nifty, that will come up for you on the screen. And that one is indicating that the start for our own markets could be mildly in the red. That's what the implied open is suggesting if we compare it with GIFT Nifty as well. So that's what the setup is looking like. But we have to talk about US markets, where Wall Street ended Friday's trading session mixed with the Dow Jones adding 62 points. It hit a fresh record and closed at an all-time high. The S&P also hit another record and closed near the flat line. The tech-heavy Nasdaq, however, lost about 45 points. All three major averages registered winning week. The S&P 500 advanced 1.7%, while the Nasdaq gained 1.4% this week. The Dow is up 1.3% for the period. Okay, it's time to get you some important opinion. The markets set up in the United States, impact of the Fed's policy and equities, and more coming in from Jefferies' chief market strategist, David Zervos.
Markets just really priced out a lot of these rate hikes early that were priced in the beginning of the year. If you look at the moves in some of the projected rate levels for March or June, they've moved 60, 70, 80 basis points even to start the year. So pretty incredible. The long end has stayed pretty intact. The curve's inverted a little bit more, which I think is healthy for the stock market because it's just saying, look, we're going to stay at that 5.25 to 5.5 range a little bit more, but we're eventually going to get some what I like to call victory cuts as the victorious Fed wins the inflation battle. And I think that's a story that's still TBD, but certainly with 600 basis points of disinflation over the last 18 months or so, they've done a heck of a job compared to where many thought they would be. And I think that's the reason the market continues to do pretty well, is that long end, even though it's marched a little bit higher, has found some equilibrium here, I think, this week a little bit, especially today. It felt pretty good.
Okay, it's time to get you the final update on our global market wrap this morning. European equities ended Friday higher, with both the French and the German index closing at record highs. The French CAC rose 55 points, the German DAX gained about 50 points, while the British FTSE closed with gains of 22 points. An important commentary from the ECB, President Christine Lagarde said that the wage growth data in the fourth quarter that is encouraging but not enough to give them confidence that inflation has been defeated. The German economy, meanwhile, shrank by 0.3% in quarter four, marking a full-year contraction for Europe's largest economy. Okay, that's the global market action, but how will these overnight cues impact our own markets? We have a research team joining in to tell you just that. The market setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to both of you. Sudarshan, let me come across to you first up. What is the market setup looking like today?
Morning, Sonal. So, well, the setup is looking largely positive as we start this week or last week of the February series. Talking about US market, it was a range-bound session, but a record close for both S&P 500 and Dow Jones. But the major move was seen in commodities, especially oil and gas. Both Brent and NYMEX were down 2% each, and US natural gas was down almost 9%. So, these cues put together, it looks largely positive for our market. But GIFT Nifty, though, is currently trading near flatline. Talking about our market, It was a record start on Friday. Nifty hit live high for fifth straight day, but it fizzled out very soon. And the culprit of this was again banks. Nifty Bank slipped nearly 500 points from day's high, with IndusInd Bank being the top drag, and even PSU Bank saw profit booking after a few negative reports from brokerages. And one sector, IT, where we had anticipated a big move after a surge that we had seen in Nasdaq on Thursday, failed to boost the sentiment, with most IT stocks closing at day's low. But it appears that most of the dips that we saw on Friday were used as a buying opportunities by both FIs and DIs. FIs bought shares of almost rupees 1300 crore and DIs almost rupees 200 crore in the cash market on Friday. Lastly, in the cues to watch, on the global front, we'll have new home sales data of the US and earnings of Domino's. On domestic front, some stocks I'll be tracking on the basis of news flow are Kotak Mahindra Bank, SpiceJet, Z Entertainment and the Reliance Industries.
Okay, all right. So those are a couple of stocks on our radar. Thank you, Sudarshan, for that. But the other stocks that will be in focus today, Upasana has this list. Good morning, Upasana.
Good morning, Sonal. First up is Rain Industry. The company reported its Q3 and the revenue was down about 25% on a Y-on-Y basis. Next up is GSW Infra. The company gets a LOA for mechanization of North Cargo berth for handling dry cargo at Chidambaram Port. Next up is Kotak Bank, the Zurich insurance company, to acquire 70% stake in Kotak General for 5,560 crores. Next up is HDFC Bank. The bank gets RBI approval to sell almost 90% stake in HDFC Credila. That's the reason the bank will remain in focus. Dixon Tech, the company's wholly owned subsidiary, Pageant Electronics, has entered into a contract manufacturing agreement with Compal Smart Device India for manufacturing of mobile phones. Also, the company has launched a facility in Dehradun for manufacturing of washing machine. That's the reason the stock will remain in focus today. Next up is Westlife. The company has clarified on the reports of poor quality cheese, and the company says that it is actively engaging with competent authorities on this issue and awaiting for a final clarification. And lastly, Skipper will be in focus as the company backs new orders worth 737 crores from Power Grid.
All right, so a couple of those stocks in focus. Finally, let me go across to Nigel, who's joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning, Sonal. In Friday's trading session, you saw some lightening of positions from the FIs, both on the long as well as on the short side. So the unbound closed on 5,000 long contracts. They continue to remain net short with close on 56% of their positions on the short side. The PCR came down to closer to around 1. That's because of the aggressive call writing that we saw. 22,300 call, 22,500 call. Between them, they added close to around 60 lakh shares approximately. And there were signs of writing out there, which tells you that at higher levels, the bears believe that they can defend those higher levels. Now, the Nifty, the 20 DMA should come up for you. And that's the first reference point on the downside. So that's around 21,880 approximately. What are the crucial levels you're looking at? Since I said the 22,300 and 22,500 levels, well, both of them were seeing aggressive writing. So in the near term, the bears believe they can defend that level. But, just in terms of support, I think the 22,000 odd mark, that should be a good reference point. And if that breaks, then you're looking at that range of around 21,880, which is the 20 DMA. The Nifty Bank, it seems to be hitting a congestion zone of around 47,100 to around 47,500. And I say that because the last few trading sessions, it's going to that mark, but it's not able to conquer that mark. Just take a look at that. Last 4 sessions, it's gone to 47,000 odd, but it's not able to decisively conquer that. So that could be a bit of a resistance zone. We had a quiet close on Friday, and it appears the start as well will be quiet. The trend seems to be positive. US yields as well cooled off. You have crude oil prices as well a little bit lower. So the bulls will feel, well, this is an uptrending market, and they'll continue to buy those dips. Back to you.
Okay, all right. Thank you so much, guys, for joining us and prepping us up for this trading day ahead. We'll slip into a break now. Up next, the government has released the All India Household Consumption Expenditure Survey after a gap of 11 years. You'll get more on that when we return. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. Well, the government has released the All India Household Consumption Expenditure Survey after a gap of 11 years. The survey was done between August 2022 and July 2023 and covered 2.6 lakh households all over India and is the key base on which CPI or Consumer Inflation Table is constructed. Lata is here with the key takeaways of the latest survey. Lata?
Well, one of the first things that comes out is you have to compare 11 years. Let us look at the 1999-2000 data, 2011-12 data, and the 22-23 data. In that case, rural consumption grew by 194% in the first 11 years, 99 to 11, but it grew by 170% in the second decade. So while there is a growth, it's a bit slower than the first decade. Urban consumption also was faster in the first decade. It rose by 207%, whereas it's a rise of 148% in the second decade. Now, the positive is that rural consumption is up 40. If you take only the constant prices adjusted for inflation, then rural consumption rose by 40.4% in constant prices, while urban consumption rose by only 33.5%. This is adjusted to inflation. So what this shows is that rural consumption has grown faster. Therefore, the gap between rural and urban has distinctly fallen. In fact, it's a fall from the difference used to be 83.9%. Now the difference is 71.7%, which is good. Another positive takeaway is that proportion of food, the proportion households spend on food has distinctly gone down. For rural areas, it's gone down from 52.9 to 46.3. For urban areas, it was 42.6% of their income going to food. It's come down to 39.17%. This is very good in many ways. The first one is that our CPI basket is constructed in such a way that 46% accounts for food. Now, with the numbers declining, the next CPI index will show perhaps a 43% only for food. I think that index should take a year at least to come, but that will be a positive. The other positive is that also means that they are consuming something better. If you look at that, then in the rural and urban basket, consumer durables have gone up significantly by a good 2-3 percentage points compared to, 1 decade ago. Conveyance is the one that's gone up the most. Now, this is a bit worrying. Either people are more mobile or it is simply more costly to travel. So I would worry a bit. But the most worrying thing for me is education expenditure has come down, both rural and urban, by, almost 1 percentage point. One hopes it's because free education is available and that's why it's fallen. Or is it because there is less to go around for education? I would worry about that. There are many other takeaways, but I'm just presenting a few important ones.
Those are some interesting takeaways. Thank you, Lada, for bringing us up to speed with what the outcome of this survey is. We'll, of course, keep getting you more updates on this one. We'll do one thing, slip into a break. When we come back, we'll talk about all the cues from the commodities market. So stay tuned for that. Welcome back. You're still tuned into Power Breakfast. Well, we spoke about the global markets, equity markets. It's time to put focus on the commodity space. Manisha Gupta is joining us with all the update this morning. Hey, Manisha, good morning.
Morning, Sonal. Thank you for that. I'll start with the Brent crude prices, which have seen a decline yet again. It's extending losses, by the way, from the previous session, as there are demand-side uncertainties outweighing the supply concerns as of now. We did see prices decline by 2% in the previous week, and they've opened 0.5% down in the Asian markets right now. Well, the markets do believe that there is going to be a delay in the U.S. rate cuts. And apart from that, the U.S. has added most rigs since the month of November. The JPM, that is the JP Morgan report, also says that the global oil demand is expected to increase by 1.7 million barrels per day, is how they've seen it in the month of Feb as well. But most will depend really on the demand going forward. The street is still expecting you could be looking at more stimulus coming in from China. The markets will watch out for the U.S. Fed speeches in this week. You also have the GDP numbers, durable goods order, home sales, all of that data coming in from U.S. And then, of course, you have the inflation rates from Japan and Europe, GDP coming in from India, Canada, Brazil. So loads of data to react to. I want to put in a final word on metals as well, where we did see some support coming back into this one. Copper, for one, has put in 2 weeks of gains. It gained 1.3% in the previous week. It's trading at its 3-week highs right now. The markets are anticipating more stimulus measures to come in from China. That is the sole reason that you have seen many of these metal prices trade into the positive.
Okay, all right. So that is the update coming in from the commodity space. Manisha, thank you as always for joining us and giving us that lowdown. Let's quickly take a look at the Asian markets before we wrap up on Power Breakfast. It continues to be a green screen when it comes to Taiwanese index and Nikkei. However, Hang Seng has fallen from the top. It's down 0.7%, so that's a sharp fall that we are seeing right now. It was up around 0.3% when we started the show. And GIFT Nifty, that should come up for you on the screen. That one is indicating that the start could be absolutely flat to a little bit negative. That one has recovered from the lows, so we'll have to watch out for which way do things go as far as Indian markets are concerned. We'll take your leave, but do stay tuned. Bazaar Morning Call comes up next.